Welcome to HouseLux Estate, your trusted guide for making smart investment decisions. As we journey together through the fascinating world of high-tech real estate investing, our channel serves as your compass, pointing you towards the most effective strategies and tools available. Here at HouseLux Estate, we're all about leveraging technology to maximize returns and minimize risks in the real estate sphere. Our mission is simple: to demystify the complex landscape of real estate investments and to equip you with the knowledge and insights needed to navigate it confidently. We delve into the nitty-gritty of real estate investing, offering you tips, tricks, and insights that make a difference. We also shine a spotlight on how technology, particularly artificial intelligence, is revolutionizing the way we invest in properties. In today's video, we unravel the process of using artificial intelligence for investment decisions. So get ready to step into the future of real estate investing right here, right now. AI, or artificial intelligence, is a game changer in many fields, including investment. But what exactly is AI? Artificial intelligence, in its simplest form, is the capability of a machine or computer program to think, learn, and make decisions similar to a human brain. It's the science of training machines to mimic human actions and responses. AI operates on many levels, from the voice assistant on your phone, capable of answering your questions, to more complex systems that can drive cars or even diagnose diseases. It's like giving a pair of glasses to a computer, enabling it to see and understand the world around it in a way that was previously beyond its grasp. In the context of our world today, AI is transforming industries across the board. In medicine, it's aiding doctors in diagnosing diseases more accurately. In entertainment, it's personalizing our movie recommendations. In transportation, it's powering self-driving cars. But how does AI fit into the world of finance and investment? Well, it's already changing the game. AI can sift through vast amounts of data at lightning speed, analyze patterns, and make predictions about future market trends. It's like having a super-powered financial analyst who never sleeps. AI can also learn and adapt. It can observe how its predictions play out, learn from its mistakes, and refine its models for better accuracy. This ability to learn and improve over time is a critical aspect of AI that separates it from traditional computing. Moreover, AI can help manage risks. By analyzing historical data and market trends, it can predict potential downturns or financial crises, giving investors a heads up to adjust their strategies and protect their investments. In essence, AI is like a high-powered microscope for the financial market. It allows investors to see trends and risks that they might not have noticed, and it gives them tools to make more informed decisions. Now that we understand what AI is, let's explore how it can aid in making investment decisions. Opening. AI has the potential to revolutionize your investment strategy, but how? Artificial intelligence, or AI, is no longer just a science fiction concept. It's a reality that's reshaping the world, including the realm of investment. It's transforming the way investors make decisions, from the smallest retail investors to the largest hedge funds. So, let's delve into how AI is used in investment decisions. It all begins with data, the lifeblood of AI. Investment firms use AI to collect massive amounts of data, ranging from macroeconomic indicators to company-specific metrics. This data could include anything from inflation rates to a company's earnings records. The more data the AI has, the more accurate its predictions can be. Next comes the analysis. AI's strength lies in its ability to process and analyze this data at a speed and scale that is simply impossible for a human. It can quickly sift through mountains of data, identifying patterns and trends that might be invisible to the human eye. But AI doesn't just analyze the data, it learns from it. Using machine learning, a subset of AI, these systems can adapt and evolve based on the data they analyze. They can identify which factors have the greatest impact on an investment's performance and adjust their models accordingly. Now, armed with this knowledge, the AI can move on to perhaps its most exciting feature, predictive modeling. By extrapolating from the patterns it has identified, AI can make predictions about future market trends or the performance of specific investments. For instance, an AI might predict that a particular tech stock will rise based on a pattern it has identified in the company's earnings reports and the broader tech industry's performance. On the other hand, it might advise against investing in a certain real estate market if it detects signs of a looming downturn. In this way, AI serves as a kind of crystal ball, providing insights into the future that can help investors make more informed decisions. Closing. Clearly, AI can provide a wealth of information to guide our investment decisions, but how can we implement it in practice? Implementing AI in your investment strategy may sound complicated, but it's simpler than you think. The key is to start small and gradually incorporate more sophisticated AI tools as you become comfortable. Let's walk through some practical steps. First, consider using AI-based investment platforms. These platforms use algorithms to assess market trends, identify investment opportunities, and even execute trades. They're designed to do the heavy lifting for you, analyzing massive amounts of data in a fraction of the time it would take a human. Some platforms even offer personalized suggestions based on your investment goals and risk tolerance. Next, you might want to subscribe to AI-based investment analysis services. These services use machine learning to predict market movements and provide investment recommendations. They can help you make informed decisions about which stocks to buy, when to sell, and how to diversify your portfolio. They're like having a personal investment advisor who never sleeps. Another option is to hire AI professionals. These are experts in AI and machine learning who can create custom algorithms tailored to your specific investment strategy. While this option might be more expensive, it gives you a high degree of control and customization. But remember, while AI can provide powerful insights, it's not infallible. It's still crucial to do your own research and apply your judgment. AI should be a tool in your investment arsenal, not the sole decision maker. Lastly, keep learning. The field of AI is rapidly evolving, and staying informed will help you make the most of these tools. Consider taking online courses or attending webinars about AI in investment. This will help you understand the technology better and stay ahead of the curve. With these steps, you can successfully leverage AI for your investment decisions. Remember, the goal isn't to replace human judgment, but to enhance it. By combining the power of AI with your own expertise, you can make smarter, more informed investment decisions. AI can be a powerful tool for making smart investment decisions if used correctly. And that's the core message we've been exploring today. Let's take a moment to recap the key points we've discussed. At its heart, artificial intelligence is a branch of computer science dedicated to creating machines that think and learn like humans. Its applications are vast and varied, spanning from healthcare to transportation and, of course, finance and investment. Investors can leverage the power of AI to make more informed decisions. AI algorithms analyze vast amounts of data at incredible speeds, uncovering patterns and trends that may be invisible to the human eye. From predicting market movements to identifying promising investment opportunities, AI can be a game changer for investors willing to embrace it. But how do you incorporate AI into your investment strategy? It begins with understanding that AI isn't a magic bullet. It's a tool, and like any tool, its effectiveness depends on how you use it. You'll need to start by determining what you want AI to do for you. Are you looking for short-term trading opportunities? Or are you more interested in long-term investment strategies? Once you've defined your objectives, you can then select the AI tools that best meet your needs. From there, it's about ongoing monitoring and adjustment. AI is continually learning and adapting, and your investment strategy should do the same. Keep a close eye on your investments, make necessary adjustments, and don't be afraid to seek professional advice if needed. In conclusion, AI presents a considerable opportunity for investors. It offers a chance to harness the power of advanced technology to make more informed strategic investment decisions. But remember, AI should complement your investment strategy, not define it. Thank you for tuning in to House Lex Estate. Don't forget to subscribe for more insights on smart investment decisions. Until next time, make your investments work for you.